Hi there, welcome to Kneppyinvests. On the 4th of August 2023, Resmed released their fourth quarter results. And unfortunately, for shareholders of the company, the market didn't like what they saw. In fact, the results were below expectations from the market, and the share price has plunged. And I'm being a little bit dramatic by saying the word plunged. So I'll just say dropped about 20% in the last 4 trading days. Now, I probably would consider Resmed to be a high quality company. And this is the very thing we are looking for in high quality companies when there is a price and a significant price drop by 20%. Because maybe now's the time to think about taking a position in Resmed because the market has lost a little bit faith in this company. Now, I have never owned Resmed in the past. In fact, I've never been close to owning Resmed simply because I do think this company is a little bit overrated by fund managers in Australia, and because it is a quasi cult stock in Australia. Fund managers tend to love it to death. Now, the valuation of this company has always been a little bit too stretched, possibly until now, simply because that cult-like status probably is under threat right now. So in today's video, I am going to go through their fourth quarter results. I'm also going to discuss the quality of this company, and there is one little red flag I do say when we do talk about or think about the quality of Resmed. In particular, I am thinking about the future here. There's also another red flag in regards to their gross margins. We'll also have a look at their chart, and the chart is actually really important because one of the reasons I decided to do a video today on Resmed, and this was just wasn't planned, I just decided to do it, was because of the chart, and I'll point that out when we look at the chart. So let's get stuck into it. The other thing I'm going to look at is valuation. So I'm going to look at the PE ratio of this company over time. And what I like to do is just compare some valuation metrics right now to the past. And if you do that, sometimes you can see whether a company is trading at good value, fair value, overvalued, or possibly even undervalued. You also can get a sense of the current sentiment in a company by just looking at their valuation metrics alongside the chart of the company. So for those who don't know, Resmed deals with sleep apnea. Now, I have no issues with sleep apnea, but the one thing I do notice when I look at their equipment, particularly their mask, it looks quite evasive. And one of my maybe problems with Resmed is the potential for solutions down the line that are not quite evasive as a mask. In fact, there was an article I read the other day. This is on 9.com.au. Aussie researchers find way to avoid CPAP machine, which is the continuous positive airway pressure machines that Resmed sells. And this is the mask. I'm not sure if this is a Resmed mask, but this is one of the masks that's out there. So there is competition out there, but I would not like to wear this mask every single time I go to sleep at night. And the other thing I did actually look at was a company called Eli Lilly. And this is a behemoth on the, I think it's New York Stock Exchange. Market cap of this company is something like $500 billion or something like that. I could be a little bit wrong. Let's have a look at Eli Lilly. So hands up who has never heard of Eli Lilly, because maybe you should. And one of the reasons I started doing research on Eli Lilly is because they released their quarterly results the other day, and the share price rose 15% in one day. And this chart is an absolutely beautiful chart. If you look at the weekly chart here, this is the sort of company you just love to have in your portfolio. And the market cap of Eli Lilly is, $500 billion. This is one of the biggest companies in the world, yet a lot of people would never have heard of this company. Now, one of the reasons I'm bringing Eli Lilly up is because they deal with diabetes, weight gain, that sort of thing. And here is the CEO talking about their expected obesity drug. And they're also talking about sleep apnea as well, trying to solve that problem through pills and that sort of thing. So there is a possibility in the future that what Resmed is doing right now will no longer be needed. And one of my small problems I do have Resmed, I do want them to be a little bit more diversified than they are right now. But they are performing, and we'll see how they are performing when we look at the financial history of the company. So a few things I'm a little bit wary about Resmed, in particular when it comes to competition in this space. Now, let's have a look at their quarterly results and why the market really sold off. Well, the reason the market really sold off is because these results did not meet expectations. However, if you look behind or beneath the hood, there are some things to like. There's also some things not to like. The first thing I really like about Resmed results is revenue growth, increased by 23% to $1.1 billion. So this is the fourth quarter, remember. And the first thing I always look at and want from a company is revenue growth over time. So we have that revenue growth. That's beautiful revenue growth. So not sure if that will be able to be will be able to be replicated in the future. But if they can continue growing at more than, say, 10, 15% per year, their revenue, this company definitely could be good value at current prices. The first red flag, definite red flag here, is gross margins contracting to 55%. And I'm going to have have a look at the gross margin history of this company. And this is a big red flag, in my opinion, when it comes to Resmed. Operating cash flow, $237.4 million. Income from operations only increased 8%. So then that increase in revenue is not falling all the way to the bottom line. Earnings per share of $1.56. And full year 2023 highlights. Yes, this is the end of the financial year. Revenue up 18%. So that's really good year-on-year growth. Gross margins down 80 basis points to 55.8%. Operating cash flow, $693.3 million. Diluted earnings per share at $6.09. So the main things to like about Resmed: revenue growth, pretty spectacular revenue growth. Gross margins contracting is a concern. Now, if there is reason to think that this is it for the gross margins contracting, if there is a possibility that gross margins will now expand and they can continue to increase revenue, yeah, right now is a great time to buy Resmed. But I think the market is selling off because they're not sure whether this is the end to this little part of this company's history where gross margins are contracting. And there is a reason behind that. So that's all I'm going to talk about Resmed's financial results. I was going to show you the cash flow statement, but I won't right now because I have other things to discuss. So on to the quality of this company. Now, this is ticker, and this is simply, in fact, can I expand that? I'm not sure if I can. Full screen, I can do it full screen. I don't like the color scheme here. Anyway, so hopefully this is not really bad as you watch this, but this is the revenue history of this company over the past 10 years. And the main thing I want to see here is revenue growing during this period. And without doubt, revenue has been growing through this period. So this is the first thing I look for when I'm deciding whether a company is high quality or not high quality, is revenue growth. If I don't see revenue growing year after year after year, it doesn't have to grow every single year. That's the other thing. I want to see that growing. And if I see revenue growing year after year, that's a good sign a company is high quality. Now, the other thing I've got here, and I actually will get rid of this full screen view if I can. And the other thing I've included here is gross margins. And this is a concern for me because gross margins have been dropping. So back in 2013-14, gross margins actually were as high as 63.7% in 2014. Then they fell. We're going sideways between 2016, a slight jump in 2020 to 60%, but they have been dropping over the last 3 years. In fact, gross margins have dropped from 60% to 55.8%. So that is a little bit of a concern. Some of the other things to mention here or notice here, operating margins have actually risen for over the last 10 years, but only slightly. And what else? Net margins. Operating margins. And yeah, that's about it. I probably want to show you. If you do look at cash flows from operations, that sort of thing, you'll probably see exactly what I want to see is over time there is growth, but you'll notice a little bit more lumpiness than revenue, and that's understandable because some years they're going to have better cash flows from operations, some years worse cash flow from operations because of working capital changes. So that's one reason I don't just focus on operating cash flow, free cash flow. Also look at revenue and profit because operating cash flow and free cash flow can be quite lumpy. for all companies. Even if you look at free cash flow, which should be down here somewhere in the cash flow statement area, free cash flow should be quite lumpy as well. Anyhow, so the main thing here is revenue is growing, operating cash flow is growing through time, free cash flow is growing through time. The only concern is dropping margins. If I was confident this is it when it comes to margins, if they can increase the margins from now on, and they did try to describe or explain why margins have dropped over the past year, but I tend to ignore management commentary on stuff like that. I want to see with my own two eyes, that margins have stopped dropping, which means we're going to have to wait either to the next quarter or the next few quarters. I like to see at least 2 quarters of gross margins rising. Now on to, we'll go to Guru Focus, looking at the 30-year financial history. So this is really important when I look at stuff like return on invested capital, return on equity. Maybe I should just zoom in here. So this is my own setup in Guru Focus. So I have revenue per share, earnings per share, return on equity, return on assets, return on capital, invested capital, weighted average cost of capital, gross margins, operating margins. So I've got everything I want: revenue, gross profit, operating income, net income, earnings per share, EBIT, EBITDA. So this is my own setup. So if you do join Guru Focus, or you can join without paying, you can do or include anything you want in this particular look. So the thing I'm going to focus on right now is return on equity and return on invested capital. And this is another thing I look at in terms of, or trying to decide whether a company is high or low quality. So let's just focus on return on equity first. And this is a 15-year period. So return on equity has been greater than 10 over the past 15 years. In fact, the lowest it's been was way back in 2008 at 10.3. And over the past, say, 10 years, typically return on equity has been greater than 20. Right now, according to Guru Focus, it's around 24.3. That's a really good return on equity. I tend to focus on return on invested capital just because it's a little bit more conservative, and you can, or management can, have higher or get better or higher return on equity by increasing the debt, something like that. So return on invested capital takes that into account. And typically you will see return on invested capital a little bit lower. So the number I'm looking for when it comes to return on invested capital is greater than 10, preferably greater than 15 or even 20. And for Resmed, return on invested capital has generally been greater than 15 over the past 10 years. And again, the worst year was 2008. So every single year, greater than 10 or even 15. In fact, if you just click on the return on invested capital, it takes you to a new screen in Resmed, and it shows you the mean. So the median is 18.7. That's over the last 15 years. That's exactly what you want. It even says here it's growing at 2.2% per year. So return on invested capital, according to Guru Focus, is expanding. So based off revenue growth, based off return on equity, return on invested capital, they're all pretty high. Just those things alone would suggest that this is a high quality company. But again, that decline, that contraction in gross margins is a concerning thing. Another thing that gross margins could sort of point towards is an increase in competition. And if there's an increase in competition, they might have to decrease the costs of their sleep apnea masks and stuff like that, equipment, whatever you want to call it. So that is a concern, that gross margins is decreasing. So not only does it suggest possible increase in competition, it also suggests less pricing power. If a company has pricing power, they should be able to maintain their gross margins because it takes into consideration costs. So if costs are increasing and a company can't increase the price of the stuff they're selling as costs are increasing, that will have an impact on gross margins. Not sure if that is happening with Resmed. So many things are pointing towards Resmed being a high quality company. Revenue growth, return on invested capital, return on equity. Another few things we can look at, for instance, dividends. So probably minuscule dividends. Yeah, dividend yield less than 1%, but dividends have been increasing. They issue a dividend every 3 months. I did not know that. Something to learn every single day. But the main thing here is, over the past 10 years, dividends have been increasing. Another sign of a high quality company. But again, this is looking at the past. And my concern about the future is that competition and the possibility of new innovation, innovation coming along that really improves how we treat sleep apnea and masks, stuff like that, stuff like Resmed is selling is no longer needed. Now, the other thing I like to look at is this one. I'm pretty sure I can, yes. So what this is, I'll just move my camera over there. What this is just looking at the P ratio of Resmed over the past 10 years. You can go back further if you really want it. So maybe we go back, no, we'll just do 10 years. And you'll notice here, if you go back to 2013 to about 2018, the P ratio of Resmed was typically between about 20 and 35. So if it ever got to 20, that would be a great time to buy. But then you can see the P ratio from 2017 all the way through to the middle of 2021 rising. So this is what we call multiple expansion. The market is more and more willing to pay premium for this company. Again, our reason behind that is because fund managers in this country fell in love with Resmed, and they were just willing to buy this company no matter the P ratio. In fact, the P ratio at one point for Resmed got as high as 90, which is absolutely ridiculous. Not sure if that's absolutely accurate, but it has been, apart from that time, has been as high as about 60 just prior to the COVID-19 financial panic, but it has been falling. And right now, it is about 30, maybe even below the 30 after share price action today. And the last time the P ratio of Resmed was below 30 was way back in 2017, around the time we started to see the multiple expansion. If I saw the P ratio of Resmed get as low as 25, this company will become even more enticing than it is now. So I think possibly the market has lost a little bit of faith in Resmed. So, all right, so that's that P ratio. What else do I want to talk about? I think that's really it. So, apart from the chart, and the main thing about, or the main catalyst behind me doing this video was really the market reaction to the results, share price falling 20%, and also where the share price is right now. Now, Resmed is also listed on the New York Stock Exchange. So if you do go to TradingView, just don't click the first company because that will take you to the New York Stock Exchange chart. But you can see that the share price of both should mirror each other fairly closely. So this is the weekly chart. So I'll just start with the weekly chart at first because this is really interesting. And this is another sign of a high quality company, just the chart, beautiful looking chart going all the way back to 2013 when the share price was. So if you go back to 2012, the share price of this company was about $3. So this is almost a 10 bagger over the past 12 or so years. But the share price has been an uptrend ever since then. And what I'm going to do now is I'm going to just change views here. So the blue line on the bottom here is the 150-week moving average. And the share price ever since 2011 or 12 has been above the 150-week moving average. In fact, that has been a nice little support level for the company's share price over the past few years. But the share price has fallen through that level in the past week. So this is very important. This is the first time the share price has been lower than the 150-week moving average over the last 12 years, which tells us there has been a little bit of a shift in sentiment around this company. So that cult-like status of Resmed may have shifted. No longer a cult-like stock, which is one of the reasons why the P ratio is now down, possibly below 30, because the share price has dropped 0.4% today. So 4 days in a row, share price has dropped. Hasn't been 4 days in a row. I can tell you right now. This is a trade history. Yep, 5 days in a row, the share price has fallen. In fact, the share price has fallen from $33.85 to $27. So we're talking about not quite, about 20% or so. Very quick mathematics. My very quick mathematics can be quite wrong at times. Now let's have a look at the daily chart. And this is where it does become interesting. So when you look at the daily chart, this goes back to October 2021. There's no trend at all when you look at the daily chart. So if you look at the weekly chart, beautiful uptrend, but the trend has changed when you look at the shorter terms. But the most important thing here is back in May of last year, 2022, the share price of Resmed fell to $27.50 and then started rising again. And what happened yesterday on the 9th of August? The share price of Resmed closed at $27.50, right on that recent low we saw 1 year ago. So $27.50 should be a nice little support level for Resmed. Now, the share price today has struggled and has dropped a little bit to $27.31. The other thing to pay attention to is the volume. Massive volume coming through. So without any doubt, the reason why there's massive volume coming through is because of fund managers who were disappointed with their results selling en masse. But there's also buying. Someone is buying the shares up. But unfortunately, there is more supply entering the market than demand. And that's why the share price of Resmed just keeps on falling. So the very fact the share price has fallen below the support level is a little bit concerning, but it has to remain below that level. Now, I would say, without even looking at whether this is oversold or overbought, without doubt, this is getting towards becoming oversold. 5 down days in a row, and I wouldn't be surprised to see a nice little rally in the share price. And on that expectation, without seeing it, I've actually taken a little bit of a trading position in Resmed on expectations the share price will bounce. That might not happen. And if it doesn't happen, well, I bought a high quality company at maybe good value. So let's have a look at the 1 hourly chart, which will look at the share price just collapsing. So you notice massive gaps from the end of one day to the start of the next day. And that's because this company is traded on the New York Stock Exchange, and Australian investors wake up and they see what happened to Resmed's share price on the New York Stock Exchange, and they say, well, I'm going to sell this because the Resmed shares on New York Stock Exchange has fallen. That's why you see big gaps up, big gaps down from day to day. You just definitely see it here. See, it's not quite as smooth as non-American listed companies. So another company that can see a very similar pattern is BHP. So you see big jumps from day to day, because again, it's listed on the New York Stock Exchange. Well, yeah. So if we go to Fortescue, for instance, you won't see gaps every single day because it's not listed on the exchange. And yeah, no gaps, no big gaps. There's small gaps, but not quite as evident as BHP and Resmed. In fact, Resmed is probably the most obvious. So if we look at the hourly chart, if it comes in, the share price just stayed right on $27.50 for about 7 or 8 hours, and they've just fallen through. So if the share price stays below $27.50, that means this support level has been broken, and then I'll just sell my trading shares in this company. So that's all I've got for this video. If you have any questions about Resmed, just leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.